Great. So is my screen visible? Am I audible clearly?
Yes, sir. Visible and audible.
Thank you. Sorry for the delay. I had an emergency patient at 7:30, so I had to push it a little bit. So welcome to today's session. This is a topic on demand by one of our MPG members. So the topic is gifting, gift provisions, and clubbing of income. We actually have very less idea of what it is. There are many sections involved in both of them. I have tried to keep it a little bit simplified in my way. I knew a lot of things about this. The only thing is that there are a lot of clauses, a lot of sections. You may not need to remember the sections here, but then some of the literature that I had actually mentioned all the clauses. So you can ignore the clauses as such and try to understand the basic of that. But unfortunately, the topic is a very boring one, a very dry one. So there will not be much of entertainment involved in that. So I apologize priorly on behalf of that. We'll take about 75 minutes to finish the presentation approximately. But yes, I definitely believe that at the end of the presentation, you will be much more enriched than what you are. So as usual, you can keep noting your queries or keep posting them in chat box. I'll take all of them together at the end. As usual, I'll take up first from the chat box and then I'll take up from the live audience, whatever it is. So let's begin. So as usual, all my presentations will always begin with thanking the Lord Almighty who's given me much more than what I deserve. So when it comes to finance, my dad was again very fond of gifting provisions. I have so many gift deeds still retained with me, obviously in the soft copy only. The hard copy time period span has elapsed long time back. But yes, I have retained them. It is of an emotional value to me. So he actually gifted a lot of money to us in the initial stage of career, and he made sure that a gift date was exchanged between the donor and the donee. So I'll give you the format for that as well. So this is my brief biodata. You all are aware of it. So the topic for today: gifts, taxation, and clubbing of income broadly. What are the provisions in the income tax for both of them? The irony is that both of them don't exist as separate tax in India. The provisions are itself within the ITA 1961, Income Tax Act 1961. I may refer it to at ITA as well in my future wording when I am speaking on it. So this is webinar number 23. And for a change, you will find that this is 8th on the trot in the past 5 days, since a parallel balance sheet workshop is also going on. So only on I think Tuesday we had Wednesday we had 2 sessions. Sorry, Tuesday we had 2 sessions, one in early in the morning and one in the night. But otherwise having once a day. But then even then sorry, yesterday also we had 2. So today also 2. So this is the 8th one in the fifth day. But yes, the week is coming to an end and I have just one each tomorrow and day after. So we are actually a country built on families, cultures, traditions. We have rich diversity in that regard. And our culture says that we do not go at any function empty-handed. We always gift our loved ones. Obviously, we don't go to the occasions where there are no loved ones. But yes, gifting is regarded as a symbol of love and affection, and obviously social status as well. Yes, of late, these things are now reducing in a lot societal groups in India, but still they continue to exist in majority. COVID has made sure that the gatherings have reduced a lot. But then before that, even certain people actually in North India, especially where there is a lot of 498A cases, Dowry Act to be precise, people have actually shifted to giving, say, a very close-knit family functions to each other, or maybe organizing such similar functions, because people spend sometimes 5 lakhs and then they claim 40 lakhs in the dowry cases. So this is a very common thing in our society, in North India at least. So, but then where there is a provision, there is a escape route as well. So people actually use gifts as a part of tax evasion as well. So unless you are bound by the law, unless you are doing the things within the framework of the law, everything is legal. But once the things get out of hand, yes, you can be penalized. India used to have, like wealth tax, India used to have gift tax also. Gift Tax Act was 1958, 3 years prior to the Income Tax Act. It was there. The only thing was uh, everything was covered in that: cash, demand draft, bank checks, or anything having a value. And it is not only the cash which counted, the say things given in kind were also there. But unfortunately, in 1998, the Gift Tax Act or GTA was abolished, and all the gifts were made tax free. Then, like standard deduction, it was again introduced, although that is a different provision. But then it was included in ITA 1961 again in 2004, because people actually used to make a lot of hay while the sun shined. So sun shone, sorry. So that is the reason they had to actually resort to such a thing. So we need to have a basic understanding that what exactly it is. So if you go by the income tax definition, what exactly is a gift? It is the money given in cash, check. It can be even an immovable property like a land or a building, and it can be a movable property like a share, jewelry, or drawings. Drawings means cash in that sense. So these are the three broad heads wherein you actually classify the gift in as per the ITA. So are both of them taxable? The first question is this only. So to put everything speculation to rest, every item, including cash, gold, real estate, is taxable. For cash, the range has been set at 50,000, even if it is on a marriage. And now, since the last year, the provisions of 269 ST have come into play. The cash that you receive from a person, similar to your doctor-patient or dentist-patient relationship, not more than 2 lakh cash in a day. We have that for obviously for a treatment protocol, because we don't charge once a day. We charge according to the sitting. Rarely would a patient pay 100% advance payment, especially for a long case when it is crossing 2 lakhs or up to 2 lakhs. Nobody would pay advance payment. So that actually 269 ST provisions are for 2 lakh cash in a day. Those were all introduced last year only, I think in Jan or Feb 2020, to curb the cash evasion. Some of you are doing the balance sheet workshop. I told you about the 2.0 version of AIS, or the annualized information statement, which has come up on the compliance portal. And the ITD also is coming up in a 2.0 version from 7 June onwards. So many things are going to change, and the news is going to be tightened. If you believe that you can get scot-free from one way or the other, it does not. So it doesn't mean that you can't receive more than 2 lakh. You can still receive it, but anything above 2 lakh has to be in digital mode. So that is the curbs which have been produced. And there is a huge list of transactions which various reporting bodies like banks, NBFCs, even your mutual fund houses, all of them have been given a list of, or a threshold of transactions which they are supposed to report to the income tax authority. And as I was saying in the afternoon, the time is going to come that actually we will feel strangulated, that there is no way to escape, because people have been using these transactions of clubbing and gifts both illegally. Legally, that is fine, but they are using it illegally as well. So the first thing is, who can gift you actually? So it is, we always say the blood relationship or the relatives can gift us. So what comes in the definition of relatives? First, I'll give you the English version, then the Hindi version. Spouse of the individual, brother and sister of individual, brother and sister of spouse, brother and sister of either of the parents. That would mean your mama, mami, and chacha, chachi, taya, tai as well. So any lineal ascendants or descendants of individual means dada, dadi, pardada, pardadi. And similarly on the spouse side as well. So this is the broad definition of relatives as per the ITA. So let's look at them with a Hindi connotation. So these are the list of male and the female donors: Papa, Bhai, Beta, Pota, Pati, Jija, Sala, Devar, and accordingly the list goes on. Mausa, Mama, Chacha, Fufa, all those relatives that I mentioned. Just go through this list once again. Spouse, brother and sister of the, if you are the donor, you, your spouse, your brother and sister, your wife's brother and sister, considering I've considered you as a male. So then brother and sister of either of the parents of the individual, then lineal ascendants or descendants. Now look at the Hindi list. I'm freezing the screen for a couple of seconds. If you want to take a snapshot, you can take it. That is not an issue. So these are the list of the male and the female donors which are eligible as relatives in the Income Tax Act, which can actually gift you. The only provision is that once you are doing it, you have to exchange a gift deed. I'll give you the format for that as well. You can take a snapshot for that also. A gift deed need not be on a legal document. It can be on a normal A4 paper as well, not even on the legal size paper as well. But yes, to be on the safer side, people do it on the stamped paper also, legal size paper also, notarized also. It is up to them. The simple plain format is valid as well. And I have plenty of those with me since almost year 2000. So gift taxation in India. The basic reason is if you are liable to get that provisions, those income would be added under the income from other sources. So the only thing is the word which is very commonly used in gift taxation in India is consideration. Consideration for a service which you agree to provide. So beyond that, I'll give you examples for consideration as well. So in simple service, if you define consideration, it means everything received in return for a provision of service that you have rendered. And that may include a monetary payment or a non-monetary payment nature as well. There is a very classical case of, which was in news a few years back as well, the case of Priyanka Chopra versus the Income Tax Tribunal. And she was gifted a car. I think I placed that example in it as well. So I'll share it when the time comes. So what are the kinds of gifts that are covered? What is the monetary threshold and what is the quantum which is taxable? So any sum of money without consideration means आपने कोई मेहनत नहीं की है या कोई उसके लिए काम नहीं किया है. Anything above 50,000, entire sum is taxable. Here you need to understand that if somebody gifted you, let's suppose you got married, somebody gifted you 49,000. Even if it was not a relative, it was your friend, gifted you 49,000, that amount is tax free. But if somebody gifted you 51,000, that whole amount is taxable, not only 1,000 above 50. So the entire quantum of money is taxable if the threshold crosses 50,000. So for any immovable property, again, stamp duty value, which is greater than 50,000. Obviously, no land would come in the price of 50,000 unless it is in a village. Even there, it won't be there. So then any immovable property without consideration where it exceeds 50,000. So stamp duty value minus the consideration cost. So it is without consideration. Here it is for inadequate consideration. For example, you work for someone and he gave you 100 yards of land, 100 gaj zameen de di, which that is an inadequate consideration sometimes. So similarly, example, stamp duty value was 2 lakh, consideration was 75,000. आपकी मेहनत बनती थी इतनी, आपको जमीन मिल गई ज्यादा महंगी की. So what is the difference between the two? And that is 1.25 lakhs. In that, the whole 50,000 threshold also goes out of the window. So 1.25 lakhs is purely taxable in that case. And if the consideration is 1,60,000, the taxable gift is nil as a stamp duty. As a stamp duty does not exceed consideration by 50,000. So that is the difference between the two, because your consideration has to be, in this case, 75,000. So this is the provision you have to keep into the mind whenever you're doing it. So any property or jewelry or shares or drawings, fair market value for the jewelry or such similar thing, the FMW is taken, which is known as the fair market value. And the fair market value, which is more than 50,000, is taxable. And similarly applies for other things as well. So a few things. Immovable property received as gift, similar thing what you have seen just in the chart, trying to explain you in the text format. So received as gift without consideration or inadequate consideration. So those are actually which are exempt and which are not exempt. Let's see. So cash, If aggregate value is less than 50, then nothing will be taxable. If value exceeds 50, whole amount will be taxable. Just I told you a few minutes back. So movable property, when it is at a gift without consideration, without you having rendered a service to that individual. So the fair market value comes into price or the stamp duty thing comes into price. It was for a movable property because it refers to jewelry, shares, or whatever stocks, whatever it is there. In those cases, in cases of movable property, FMV is taken into account, and immovable, I told you, stamp duty is taken into account. So excess differential amount will be taxable in that. So when it comes to immovable property, similarly, if whatever exceeds the stamp duty value, the same is taxable in the hands. So tax on gifts in India for inadequate consideration. Similarly, the stamp duty value, if it exceeds, has to be not more than either of the two, more than the higher of the following: the amount of 50,000 or amount equal to 5% of the consideration. And the excess differential is taxable. It is the difference of amount which is taken in such cases. So what are the exempt gifts? From people, from individuals, from associations, there are certain clauses as well in the ITA which render that certain gifts will be fully exempt. So any sum of money or any property received from any relative, the list I just gave you, on the occasion of marriage of individual, under a will or by way of inheritance, in contemplation of death or payer or donor, or any from local authority, from any fund or foundation or university or any institution, from any trust or institution that is registered with the government of India, or any fund or any hospital by the way of transaction. Again, various clauses which are there. We don't need to go into those clauses. This is not VIB. This is clause 6, B, C, CA, CB. So you don't need to be worried about those things. But then these are various bodies which are various clauses where the gifts are fully exempted. So gifts up to 50,000 per annum, and the list is not one instance, it is per year, are exempt from tax in India. So gifts from specific relatives like parents, spouse, and siblings are also exempt. But in other cases, they are taxable. So gifts, the similar list, to give you an example, 50,000, they are exempt from tax. If you receive 75,000 as a gift from your friend, the entire amount would be added to your income and taxed as per your slab rate, whatever it is. So again, would be considered income from other sources. So for example, if you receive 50,000 from one friend and 25 from another, the limit again would be breached. So entire value would be taxable. It can't be that you can receive 50,000 or 49,000 from 10 individuals. That also is not allowed, because ultimately you will have to add that into your own income. Yes, such things are there when we decide to be very honest. Who plays honesty card these days? We all know. If the amount is received in cash, doesn't touch the digital medium or the bank, nobody really bothers what goes in or what goes out. So you know about the difference, movable and immovable. Now give you an example. If you're given a flat worth rupees 50 lakh according to circle rate or the ready reckoner rate, which takes into account the indexation or the market value, and you pay only 30 lakh, then the excess 20 would be considered as a taxable gift. So the difference is more than that. So naturally it will not be, the 100% will not be taxable. So it will be accordingly. Then gifts given in contemplation of marriage of recipient, gifts for the death of donor, and then those which are inherited under a will or inheritance, that is totally tax free. Somebody inherits something from his father or mother, that is totally tax free. But then when that amount which is inherited, for example, it is a bank balance, or even if it is a property, if the property is inherited in your name as per the will, and you sell off that property, you still have to pay the LTCG, the long-term capital gain tax on that. If whatever amount, 10 lakhs, 20 lakhs, 30 lakhs is inherited into your account, the moment that amount starts earning interest from day one, whenever it is transferred, even if it is a saving bank account interest, that is taxable fully in your hand, because the same amount has now started earning the income. That amount will not remain tax-free for eternity. That you should remember. Then I mentioned about the local authority. If somebody gifts you a land, these days a lot of things are being distributed in Delhi also. by the Honorable CM. So property received from any fund, foundation, university, educational institution I mentioned, and from a trust. So just see the category once again. So category of the donee, who is the recipient, and donor, who is actually giving. So individual, any person, marriage, any person under a will, any person under the contemplation of the death of the donor. So from the local body, the similar thing, summarizing it in a tabular format for the convenience of all of you. So let us see various other scenarios. What is the scene of taxability of gift to minor, taxability of gift to uncle by nephew, whether gifts received from friends and relatives on occasion of daughter's marriage are exempt, your friends and relatives on your daughter's marriage. So taxability of gift of car, interest-free loans. I think gift of car is there, so Priyanka Chopra case would be here. So interest-free loans can be charged to tax, and taxability of gift from mother's sister's son, and tax on gift of immovable property. Let's see, I might have covered all of them or maybe a few of them. So this is the chart firstly, just to tell you what I have been discussing. Any person receives from any person sum of money greater than 50,000, any immovable property, any movable property. So these are the three broad heads. Then immovable property like a land can be distinguished into the stamp duty value or the SDV, as we say. Above that amount, 50,000 would be taxable. In movable property, we take the FMV or the fair market value. So a gift to minor. Mr. X gifts rupees 50,000 to his nephew, Mr. Y, and rupees 51,000 to the minor son of Mr. Y. So in this case, it is to be noted that gift of rupees 50,000 received by Mr. Y from his uncle is exempt. But जो उन्होंने अपने भतीजे के बेटे को दिया है, जो minor है, there are two issues. Whether this gift is exempted being received from the uncle of Y, वो Y के अंकल हैं, Y के बेटे के अंकल नहीं है, Y के तो cousin दादू लगे एक तरह से, cousin दादू. So whether exemption under section 1032 is to be given to minor before clubbing. So those are the two considerations. C, Mr. Y's father, he is relative of Mr. X, brother of Mr. Y's father, obviously if it is his nephew. So Mr. Y, he is the nephew of Mr. X. If you can see the chart, they are brothers. So he gifted this amount to this. So he's a relative of this. So further, the son of Mr. Y, who is minor, he was also gifted. He is directly not a relative of this. This cousin Dadu is not in the list of that. If you saw the Hindi or the English list. So this is not included in that. So I think you very clearly see that this list is, this actually sets this doubt to rest. So then taxability from a gift to uncle by nephew, it is from a relative, so it is exempt. If it is a gift from non-relative, so taxable. So uncle can give to nephew, but nephew cannot gift back to the chachu. It is the lineal descendant relationship. If it is a same age relationship, like a brother and a sister or wife's brother and sister, that is still okay. But a younger one cannot give to the elder one. In that case, that is a non-relative, because आप उनके नहीं हैं, ये आपके फादर के भाई के, आपके फादर के भाई हैं, आपके साथ डायरेक्ट कुछ नहीं है relationship in that sense. So that will be taxable. So gifts received from friends and relatives on the occasion of daughter's marriage are exempt or not. So if Mr. X receives rupees 2 lakh as shagun at the time of his daughter's marriages, gifts worth 48,000 were from friends and 1,52,000 were from relatives. So what are the implications in this case for the daughter whose marriage was solemnized? Let's see. So the gifts are received by Mr. X on the occasion of marriage of daughter, and they are from friends and relatives. Marriage of individual are, the gifts for marriage of individual are exempt for that individual only. So in this case, the father has received the gifts, not the girl exactly. So they would not be exempt for Mr. X under the clause. Look at the scenario once again. The friends were of daughters, not the fathers. The relatives are primarily of fathers. So this will not be exempt for the father. This will be exempt for the father, since he is solemnizing the marriage and he is getting it. These are the IT provisions. Illegally to bahut kuch hota hai. I'm just telling you the lawful provisions. So regarding gifts from friends, the exemption of 50,000 would apply. So he has received 48,000. It is less. So then it will be obviously not taxable. That in that sense, since it is less than 50. If it was more than 50 and they are not even the friends of the father, so obviously they would be taxable in that hand. So let's see the taxability of gift of car. It is again a movable property or unmovable property. There are different designations to it. If a property has to be defined as per section 50A, 56, so it is a movable property being the land, the shares and securities are the movable properties, jewelry, archaeological collections, drawings, paintings, sculptures, and any work of art or bullion. So any asset like motor cars, mobile phones, watches, laptop is not taxable in the hands of recipient. But the gift of car is not subject to tax. But if it is in lieu of a professional services or a sale target, then it will not be treated as gift and put to tax income for business and profession. The similar case that I was talking. So Miss Priyanka Chopra, kindly mute yourself, please. Whose audio is on? Just a minute. So Priyanka Chopra versus the income tax tribunal case. So Priyanka Chopra had entered into the agreement for environmental issues with NDTV in association with Toyota. So Toyota Prius sedan was gifted to her for being the brand ambassador of the NDV Toyota Greenathon campaign. The market value was assessed and they contended that yes, she received the remuneration for her services as the brand ambassador. So for the tax in receipt. But then that was not allowed since she did not render any services to Toyota. It was only for the promotional purposes for the NDTV. It was an association. So they rendered that it could not be taxed in her hand. But the Mumbai ITAT held in favor revenue that SSC had done the promotional activity which had also promoted the brand of Toyota. So value of a Toyota car in this has been rightly added in her hands. So finally, the argument there was no written agreement between Toyota and SSC was irrelevant and unsustainable. So ultimately, she had to pay tax for that. So gift from mother's sister's son is taxable. It is again the junior descendant. The lenient ascendant or the descendant thing comes into play. See, the ascendancy is from top to bottom. From bottom to top, it is not there. See the chart. This should be clarifying each and everything. I'm just stopping here for a couple of seconds so that you can note or maybe take a snapshot for this. So now the provisions of 269 ST, the cash transactions which came into play last year, about 2 lakh provisions of cash in a day, of 20,000 for any loan or any property payment, of 10,000 for any business transactions, and for 2,000 for donation to NGO and a political party, all in cash. The limits were or the thresholds were set. 2 lakh for cash in a day from one person to another, 20,000 for loan or a property payment, 10,000 for a business expense, and 2,000 for donation or political to a NGO or a political party. So if the individual exceeds 50,000 in aggregate, the entire sum is subject to tax. But 269 ST आने के बाद कुछ चीजें change हो गई. So what does the provision say, which is applicable to us in clinic also for taking the patient payment from the patient in that regard? So in 2 lakh, we shall not receive more than 2 lakh in cash, of course, in aggregate from person in a day or in respect of a single transaction. For example, if we are doing a FMR case, that is a single transaction for us. It may have a subdivisible component. So in respect of transactions related to one event or one occasion from a person, these are the various clauses. And you cannot actually play smart that you can give, if the total FMR case is costing you 4 lakh rupees, you give 2 bills of 2 lakh each. That won't be admissible. And then ultimately, I gave you the example of Pannu Pukada Wala as well. You'll ultimately have to pay almost 75% of the amount or even close to 80% as well as penalty and other fees leviable. So any amount above 2 lakhs can be given, but still that has to be through the digital mode only or any electronic mode. So, for example, if a person receives rupees 3,000 from his friend as gift in cash and rupees 2.5 lakhs from a relative in cash, so gift of 3 lakh will be included as income from other sources since it has crossed the threshold of 50, and further a penalty under section 271. This is the provision of 269 ST only, which was added last year. Amount 100 equivalent to 100% of penalty will be imposed if you received cash in violation of the section. So in case of gift of 2.5 lakh received, no income will be put under this section, but yes, penalty will be levied because it has crossed the threshold of 2 lakh rupees. So if you receive a gift in contravention of the act which mentioned not crossing 2 lakh rupees, similarly, you have to deposit the same with the government plus tax on the same income. And that is what I say when I tell for business expenses also. You will not be allowed to, yes, you can argue on that we are under presumptive taxation. We don't need to say store our bills. But God forbid there is an audit, there is an inquiry, there is a say any soft inquiry from and asking for your books or asking for even your balance sheet. And if the provisions are made in a way that yes, you have made more than 10,000 as expense, all that would be disallowed, and that would be added to your income, raising your tax liability. And obviously, if the tax liability even of 10,000 is added to, even if you are in the highest bracket, you'll be absolutely paying 3,300 rupees out of 10,000 of each 10,000, 30 plus surcharge, sorry, 3,400 in that sense, because I'm not adding 3,120. I'm just adding the 234A, 234BC as well. So probably you may have to pay a little bit more as well because it is 1% simple interest per month. So accordingly, you have to think about such things. So in general, if you have received 3 lakh in cash on your wedding from 300 guests, and you think that you can deposit the same in your bank account, the banks have been directed. They have been directed. बहुत छोटी transaction भी report कर देते हैं आजकल वो. And the news has really tightened. And I just gave the list in the afternoon as to what the provisions are being now added under the compliance portal as well. What are the things which have to be actually notified? So the IT department may question you the source of the cash. It may mention that I told you there are 3 transactions now in the 2.026 AS that is currently available on the compliance portal that says significant difference in the significant transactions, non-filing of return, and of course high value transactions. So that significant transaction is usually from the range of 2 to 5 lakhs. There may be a soft inquiry. You may be given a chance to actually admit whether the information is true or not. And if you disagree, they'll have their own sources. They'll give you at least one chance, but after that, they'll start their proceedings. I told you I have been to multiple banks many times, and I see people with their ID cards sitting over there, especially in the Yes Bank in my area. And many times I've seen them, they just taking out the statements for that. So I could very well see that those might be TEP as well. TEP means tax evasion petition. So they might be TEP cases as well. So people don't disclose. So remember, if any income tax department sends you a notice, they are not standing on loose ground. They are very much firm on that. They give you one chance for compliance since it is a self-regulated system, and we believe we actually do self-assessment tax in India. So if we are relying on that system and we are doing it, and they'll give you one chance. If you don't, they'll get back to you, and then the proceeding will start. Obviously, the only advantage these days is that it is a faceless thing. The relationships won't come into account. I am sitting in Ludhiana, Punjab. I might be talking to a AO or the assessment officer of Patna, maybe Salem, maybe Chennai, maybe Pune. I don't know where the AO is sitting. So it is the only advantage is that I don't have to go repeatedly again and again. It is all faceless. Courtesy the big efforts by late finance minister, late Mr. Arun Jaitley. He was a big fan of faceless compliance. Yes, it was notified much after his death. But this is the only advantage, and you won't say मेरे को DC जानता है, मेरे को SP जानता है, SSP जानता है. It won't come into play in such regards. And income tax authorities are immune for everything. So better play it safe and do not create a situation where you have a problem. Income Tax Act provides provision that whatever amount you receive on the marriage will not be treated as your income. But the only thing that how will you justify कि ये सारा का सारा cash हमें शादी पे आया है. You can't keep it at home. You can't deposit it in bank. You can just spend it slowly. But if it is at home, you have always the risk of a theft. Maybe your servants are there in the house, so you always are on the edge, fearing about it. So always maintain, as they say, अब lawful provision तो यही है कि maintain a digital or a manual guest register and note down the sum of money gifted by each. Many of us do it actually. They do it after the marriage. They लिखते हैं इसने कितना शगुन दिया. Then because जब उनकी बारी आएगी तो वापस भी तो देना होता है ना शगुन. So sometimes this barter system carries on in India very commonly. So then this may be used as a proof sometime, but not exactly. Again, genuineness कई बारी establish करनी मुश्किल हो जाती है. Some people may have a huge amount in that regard. So another one of such example is that if you receive money from your relatives, that is again out of the ambit of taxation. If somebody transfers you a sum of 10 lakh, obviously keeping in concomitant with the section 269 ST of the cash transaction, you still have to justify the source of money. So the best option is when such a transaction happens, even if it is a digital, always execute a gift deed. My dad in year 2000, when even transferred 20,000 rupees, he did it digitally in the form of a check. Obviously, NEFT was not there at that time. He transferred it digitally and he exchanged a gift deed and properly done with a witness signature or a two witness signature, like a consent form. So if any immovable property is transferred as a gift, फिर तो gift deed mandatory है ही है ना. What does a gift deed look like? One of the blank gift deeds that I had in my closet, I, Bhavdeep Singh Ahuja, son of Sardar Gurdeep Singh Ahuja, aged 44 years, resident of Ludhiana, you need to hold address, have given a sum, I'm the donor, have given a sum of rupees 5 lakhs, bracket main words, to my son, to my daughter. I don't have a son, I have a daughter, who's the donee, from my saving bank account number of this bank, branch, whatever. In this is the format. You can do it NEFT also. You can change the check number with the NEFT. You can add the reference number as well for the transaction, drawn in the favor of the name of the daughter or the son, whatever, for the purpose of his education, her education. Or you can write, you can omit for the purpose, you can write out of love and affection. You can gift an unlimited amount to your linear descendants. You can't gift it to ascendants, but you can gift it to descendants. Remember this thing. And similarly, if I exchange, because my daughters are minor still, but this has to be I, so-and-so, son or daughter of so-and-so, donee, have accepted the above, mentioning it from my father, from my mother, so further son of this on this date. In the token of the witnesses, you can have 2 or 1, but usually it is better to have 2. Both the donor and donee have subscribed their hands as under on. This is the wording which is mandated to be written. Have subscribed their hands on means they have done the signatures on. The donor, the donee, address, and 2 witnesses. And this can be on a plain A4 paper as well. Does not need any stamp, does not need a legal paper, does not be a registered paper, does not need your stamp paper. If somebody tells you that, I would not even debate with that guy. Because for me, such things were the epitome of success or epitome of everything, because my father used to tell it, who was a teacher to so many CAs. And his students, even after his death, still say, I remember last year, there was a confusion of what would the dental chair come under. I asked them, is the dental chair, I asked my CA jokingly, dental chair को आप electric equipment में गिनते हो कि आप उसमें गिनते हो, sorry, in the medical or dental equipment, क्योंकि ये बिजली से भी तो चलती है, तू किस में गिनता है? कि सर मैं तो मेडिकल इक्विपमेंट में गिनता हूं। बस फिर ठीक है, हम तो उसी में गिने जिसमें तेरे पापा ने हमें सिखाया है। ये उसमें नहीं गिनना चाहिए, इलेक्ट्रिकल में तेरे पापा से ऊपर कुछ नहीं था। सो व्हाई आर यू डाउटिंग हिम? सो दैट इज द वे माय फादर स्टूडेंट्स रिप्लाई टिल डेट. So the same mechanism, if you get, you can actually, it is not only that, the same can be done to get a receipt or a gift deed exchange from your relative as well who is gifted you. documents like a bank statement or a copy of, again, where you have to store it. Along with that, a bank statement or a copy of the check received or a Xerox of that, just staple it along with and store it in a place where you store your documents. So property or money received by will, as I told you, whatever money I received from my father was absolutely tax free. But then when it started earning, is not tax free. So any immovable property received under a will, you should try to obtain the original buyer's agreement, and then you can actually then make the changes accordingly. The law has changed their provisions in that unless there is a will in that, the wills are valid these days, but more so if it is registered with the local sub registrar, it carries more authenticity. So there is a lot of scrutiny by income tax departments, and as I mentioned in the afternoon as well, we have close to 7 to 8 crore returns, and out of that roughly 3.5 crore are salaried, about 2 crores are zero tax returns, probably by traders, by self-employed people, and couple of lakhs by salaried also, and the remaining is the tax payable, again the salaried pay tax also. But what is actually surprising is that approximately the traders and the businessman constitute about 1 to 1.5 crore of this 8 or 7 crore figure. And if we were to see that, since the compliance portal is now into action to verify the same with the GST returns, and you'll be shocked to know 40 crore GST returns are filed in India. They were filed last year, 40 crores. If you look at the figure 1.5 or even 2 crore of traders are there, I can never believe that 38 crore businessmen are paupers. They're not earning anything. So there is a gross mismatch, and it hurts when the national property is wasted or elections are fought in the name of free electricity, free water, and free whatnot, because it is ultimately the taxpayers' money, and it hurts a lot. There is no two way about it. But then we need to understand that documents for each gift transaction have to be maintained. Record keeping is the backbone of any transaction, financial, patient, or your otherwise. So this is the way this actually summarizes the gifting or the gift provisions by the income tax department. And I hope the dust is settled on that. So let's move on to the next section for today, the clubbing of income. And it is a very interesting section, if I may tell you. So what does it contain? So normally we say we are charged or we are taxed for our own income only. But then in certain special cases, under the provisions of section 60 to section 64, there are 4 provisions with subparts as well, where the income is clubbed. In those cases, you have to pay the income tax for the person for whom it is being clubbed with your income. The most common example for this is the minor child. If you have a account in your child's name, obviously saving bank account, or you have a FD in your child's name, again you might have gifted the same to him out of love and affection, and the FD or the saving bank account earns a particular amount of interest. For example, if the interest is, let's say, 6,500 rupees for one child, in the income tax laws, you will get a 1,500 exemption per child. So that would mean you will add 5,000 as your income from other sources in your own income. Mentioning the section in your income from other sources in your ITR, add the column. There is a provision to add the columns. There are columns by income from saving bank account, income from deposit, income by IT refund, and other. By other, you can add endless number of columns. So in that, you have to mention income from. There is no section. Yes, the CAs use a particular software to file it. In their software, they get a provision for a post office exemption as well. They get a provision for the minor account exemption as well. But in a normal ITR 1, 2, 3, 4, there are no sections which will have the provision for entering the post office exemption of 3,500 per single account and 7,000 for a joint account, and for the minor 1,500 exemption. And you can get up to maximum of 2 children and 1,500 per child. So maximum 3,000 is there. There are no sections in your normal ITR utilities that you use on your income tax portal. CAs have a software. Most of them use a software. Most of them are automated ones. So they have already fitted those things in there because their softwares are usually customized, available in their trade area. For example, as we have in our dentistry. So these are the ones available. But for individual people, ask me. मेरा पोस्ट ऑफिस में अकाउंट है, मेरे को आई हैव अ सिंगल अकाउंट, मेरी 3800 इनकम पड़ गई, अब मैं किस में डालूं? आई ऑलवेज टेल देम, बैलेंस शीट बना रहे हो तो 3500 ऐड करो अपने कैपिटल अकाउंट में, 300 ले जाओ अपने इंटरेस्ट फॉर इनकम फ्रॉम अदर सोर्सेज, बिकॉज व्हेन यू आर काउंटिंग योर एसेट्स, that 3800 is counted under your assets, so you have to balance it on the other side. How do you balance 3500 in your capital account and 3 which is exempted? We mention only the exempted income in the capital account. Whosoever is self-employed, they must be making a balance sheet. Surely it is not for the salary usually, or they don't need to make it. Rather, the remaining 300 is added above on the right side in the income from other sources. I know the balance sheet guys can identify it, those who have done the balance sheet workshop with me. So then apart from the minor children, there are many occasions where you actually need to club. In one of the webinars, I think in February, where I had mentioned, I think it was basics part 7, where I had mentioned very clearly, take advantage of your family members. And especially this was a reverse way of saying you club the income in that sense. So whatever you are getting the income as a taxpayer, you paid the tax, now that income is yours. But then that income would earn tax again. Now, sorry, will earn interest again, which will charge you more tax. So if your spouse is not working, is unemployed, or maybe is a housewife or a freelancer, not having a income up to 2.5 lakh, or even beyond that, now up to 5 lakh is also tax free. You can transfer your amount of income of some amount of your portion to your spouse account, which will earn the interest. Yes, you can exchange a gift deed. And the first relationship, as I mentioned, if you forgot to ask, the first relationship, the blood relation is between the husband and the wife only. Jokingly saying, both दोनों एक दूसरे का खून सबसे ज़्यादा चूसते हैं. You all know it. Jokes apart, I'm not saying the wife does it. I'm saying both do it. So don't quote me wrong. So what I mean to say is that they actually are relatives as per the Income Tax Act. So even if you transfer, for example, 10 lakhs in your wife's account, which is already a tax paid money, since it is a transaction you're making from your own account, whatever amount is there, it is a tax paid money. So that is now your money. You transfer 10 lakh. Let's suppose she invests that money at a decent rate of 6%. So what is the amount of return she is going to get? Approximately 60,000 rupees. If she is earning herself an income of maybe 3 lakhs and her interest income is another 1 lakh, as a freelancer 3 lakhs and her interest income is 1 lakh, 3 plus 1 4, and your 60,000 which you have gifted, now earning interest in her name investment, 4,60,000 would be her income, and that she would still pay zero tax. Try to understand the scenario. Whatever you lessen from your portfolio, if you are a 30% taxpayer, whatever amount you lessen, that from 30 immediately becomes 0%. Especially if a wife is a housewife or a freelancer having less income, the 30% shifts to 0. The only thing is we actually don't know how to do these things. North India में तो वैसे ही नहीं लोग करते जिनकी खास करके नई शादी हुई है. I told you the reason 498A. That is the reason for predominant. But yes, that is the reason HUFs are not very common in North India. They are common all over the world. Hindu undivided family, which is applicable to Buddhists, Jains, monks, Sikhs. All the sects are, except the Muslims, they have their own Sharia law. So all these are applicable to all the sects. So they can make a HUF. But in Punjab or Northern India, Delhi also, it is very less common. So what are the provisions which can actually be advantageous for you? So sometimes genuine gifts can be actually also attracting tax exemptions. So clubbing of income itself means adding the income of another person to one's own income. So certain restrictions are there. So if you get an insight on those, you'll be more beneficial. As I mentioned, section 60 to 64 contains the provisions of clubbing of income. So let's see what those sections are. So, sorry, the Priyanka Chopra slide is here, sorry. So section 60 says, any person in this sense transferring income without transferring asset either by way of agreement or by other way. So income will be clubbed in the hands of the transferor. Section 61 says asset on the condition that it can be revoked, sometimes on a lease. So again, income from such asset will be clubbed in the hands of the transferor. So section 64(1)(a), this is for the minor child. So any income arising from minor child, and minor child includes both your natural child, adopted child, and your stepchild. Both are considered as per the law your own children. And even to a minor married daughter in India, this may apply. In rural areas, daughters are married still at the age of 16. But then those provisions are applied as per the income tax scenario. Remember, the Tax Act is 1961. So yes, certain provisions are still old in that sense. And one of the commonest basis of such provisions in Income Tax Act is the Indian Contract Act, which is 1872, the Britishers' Times Act. It has still not been amended. Yes, it has been amended, but has still not been changed by those things. So, if both the parents are earning, किसके account में जाएगी? Income will be clubbed in the hands of higher earning parent. Income tax department is also very smart. क्योंकि जो higher earning है उसकी slab भी तो 30 की होगी ना, जो कम वाला उसकी शायद 20 की हो slab. So they say, as per law, it will be clubbed in the hands of the higher earning parent. So if the marriage of children does not subsist or breaks away, so income will be clubbed who maintains the minor child. Even if the child is living with mother and the mother is unemployed, getting a maintenance from the father, so that will be still added in the father's account. Again, as I said, exemption of rupees 1500 per child. There is a section in income tax, you must have seen in your ITR, section 80U, a few specified illnesses where actually disability is there. If any disabled child is earning, that income will not be clubbed. Then income earned by manual work done by the child, that will not be clubbed. Or income earned by a major child means above 18, that would not be clubbed. So those are the provisions where the exemptions apply. So then spouse 64(1)(2), ये section भी देखो कितना complex है spouse की तरह. Sorry, jokes apart, don't take my joke seriously. So if your spouse receives any remuneration irrespective of the nomenclature like salary, commission, fee, or any other from any in which you have substantial thing, these will be clubbed in the hands of the taxpayer or the spouse whose income is greater before clubbing. So this is the exception to it, is that if spouse possesses technical or professional qualification in relation to any income arising to that spouse, and that can be attributed to the application of professional knowledge. A very common example is dentists using their housewife's name as a clinic employee. Sometimes if there is an audit and if the professional knowledge or experience is not there, or she is not actually qualified enough in those sense, that whole thing can actually bounce back and crossfire. So then the similar section, direct or indirect transfer of assets to your spouse by you for inadequate consideration. So income will then be clubbed in the hands of transferor, provided the asset is other than the house property. So what are the exceptions to clubbing? No clubbing would be allowed where asset is received as a part of divorce settlement or alimony. So if assets are transferred before marriage, when the actual relationship is not started, no husband and wife relationship subsists on the date of accrual of income. If you had transferred and they got divorced when the income arose actually, or the time to maybe 31st March, or maybe when the time to ITR filing was there, or the asset is acquired by a spouse out of PIN money, that is allowance given by a husband to his wife for household expenses, that is known as the PIN money. So then say 64(1)(6), daughter-in-law, transfer of assets to your daughter-in-law by you for inadequate consideration. So any income would be clubbed in the hands of the transferor. So the word consideration will continue to come back again and again. So any person or association of persons. So similarly, again, for any consideration to daughter-in-law or any other deferred basis, it will be there. So income, such assets will be clubbed again. So then two more sections for AOPs and HUFs. So in companies also there is a different provision for the shareholders as well, but then it is out of the preview of our discussion today. So let me give you a few examples of the clubbing of income. So Mr. P is owning a shop which is fetching a rent of rupees 12,000 per month. He transfers the rent to his friend, Mr. Q, but retains the ownership of the shop. So Mr. P has transferred the income without transferring the asset. So as per section 60, Mr. P must include the rental income while computing his total income. Obviously, he can get a 30% deduction on that, but and the maintenance charge, whatever. But if you transfer the same without the ownership, you cannot actually get hold of that scot-free. So Mr. J is holding 21% equity shares of a company, PTK, and Mrs. J is employed as a finance manager in PTK. So the monthly salary for Mrs. J is sorry, not Mrs. PTK, Mrs. J is 40,000. So Mr. J is not having qualification, knowledge, or experience, as we add sometimes our housewives income in our clinic. So if you have a substantial interest in PTK without 20% shareholding, and Mrs. J is employed without any knowledge, the income will be clubbed with Mr. J's only as per provision 64(1)(2). So you cannot have that provision. Obviously, certain things are available on the book only, and people do so many things to actually prove it in that sense that she is the office manager. For being an office manager, you don't, or maybe she's the receptionist. For those things, you do not actually need to show a specific qualification, such things. So these are the situations people actually say indulge in. Then another example, Mr. Lucky holds gifted rupees 6 lakh to his wife. Mrs. Lucky invested the same amount in fixed deposit. So Mrs. Lucky receives the interest rupees 5,000 from such fixed deposit. So the cash has been transferred without adequate consideration, and it was converted into another asset. So again, income would be clubbed with Mr. Lucky only and not Mrs. Lucky. You have to show the adequate consideration for that. So if Mr. Lucky transferred the same as the divorce settlement, for example, God forbid he goes for divorce, then clubbing provisions will not apply, since it is counted as a alimony only. So if the cash is transferred before marriage and interest accrued after marriage, again, no income shall be clubbed. So husband-wife relationship has to be there. It has to be subsisting at that time. So a few things to remember in such case, that the clubbing provision is for both income and loss. If the wife indulges in any business via the money gifted by the husband and gets into losses, the husband can combine those losses in his income as well. So then capital gain on further transfer of asset will be considered as income, again in the hands of transferor only. So when you convert the asset, it can be clubbed in the hands of the transferee, but otherwise, or in the hands of transferor only. So for example, if a bond is transferred for rupees 5 lakh to the spouse or daughter-in-law without consideration, and interest of rupees 20,000 on such bond is clubbed in the hands of the spouse or the husband. So if they earn any income, no clubbing provisions shall apply on such indirect transfers. So for example, Mr. K gifts a sum of rupees 8,000 to Mrs. N, and Mr. N gifts a sum of rupees 15,000 to Mrs. K. And both the gifts are without any consideration. If they are not relatives, overlapping amount of rupees 8,000 will be clubbed in the hands of transferors, whatever is the excess amount. So ways to save tax, summarizing today's session. So these are the ways to save tax from clubbing of income. There are different ways. So interest on interest. For example, if you earn a lot of money while your spouse has zero income, you can benefit from the investments made in his or her name. The interest earned from individual investment will be clubbed with your income and taxed accordingly. But if your spouse reinvests the income and earns income, it will be taxed on him only, according to her tax bracket. For example, if you have invested 20 lakh shares in shares or equities in your spouse name, and you earn rupees 10 lakh from that, obviously you will get to pay the LTCG on that. But if this 10 lakh is again invested by your spouse, which because the shares were in her name, and she earns rupees 4 lakhs, now this 4 lakhs would be your wife's income. Assuming she doesn't earn anything, this 4 lakh will put her in 5% tax bracket. And we all know exemption is up to 2.5 lakh. So she'll ultimately pay zero tax up to 5 lakhs of income. So if you invested rupees 20 lakhs in your name and reinvested 10 lakhs to make another 4, the amount will be taxed as per your bracket. And your bracket is 30%. So you pay about 1.2 lakhs extra plus 4% cess on that as well. So if your spouse is in the 5% or 20% bracket, your tax calculations can become complicated for you sometimes if you don't know it. Those who know it, they are really blessed in this regard. Most of you know it, I know. So if your spouse is also then transferred to 30% bracket courtesy higher income, then it does not make any difference whose end it is taxed, because ultimately the 30% above 10 lakh would remain same for everyone. So you can approach this method only if your spouse or major child is not earning anything. So you can use it as a loan to child or spouse as interest-free loans. You can gift the same to your child as an interest-free loan. So this is lawful and provides you with tax exemptions as well. So loans to dependents benefits you than giving gifts also sometimes. So a simple, again, a letter exchange notifying the loan amount and signed by both parties is enough to have a good record keeping in this regard. Then investing in the name of major child who's not earning or is still studying. So you can make investments for that child as well. And you can potentially take an advantage because your child would be still in the lowest tax bracket only. So again, loans can help you to the major children, can also help you save on taxes. So make your investments in your child's name. That is why I say make your PPF or Sukanya Samriddhi investments in your child's name, because once they're going to mature, the kid is surely going to be above 18. And at the age of 18, whether the scheme has matured or not, whether it is PPF or SSA, if it has matured or not, the bank mandate is to be changed, and the same changes from minor to adult. So whenever the policy or whenever the scheme matures, it goes into the hands of the child straight away. So where does lie your tax implication? Log sochte nahi hai cheez ko. So always believe that your child will still have a tax-free income and you get scot-free from that. And you have actually, basically, आप अपने बच्चे के नाम पे invest करके अपना tax money जो कुछ ना कुछ earn करेगा, if you have enormous amount of course, you are reducing your tax liability by that matter. For minor children, it is no longer a regulated thing. A few years back, people could actually get scot-free. Now with Aadhaar PAN linking, the notices on the end of previous financial year, on the night of Holi, 28th March, it was Holi. And that night, so many people got notices. One of my group members shared today as well. He got a notice on 25th March as well, 2 days before Holi. And I gave the example in the afternoon also. One of my good friends is the president of the Bar Association, the CA Bar Association. And I asked him whether these are a thing to be taken seriously. He said, don't worry. Even I don't put in my minor's income. Don't worry about that part. This is a notice which is, many of my colleagues have received it. Is it a thing to worry about? What is this compliance portal? What is this AIS? When they already have a 26AS, why do they need to have a 26AS 2.0? What is the reason for that? The only thing was the reason was to expand its growth and scope. And trust me, पिछला निकल गया, पर अगला आने वाला जो time है, you will see surely. I at least see in the, again, maybe because of COVID, it might be delayed a bit. But again, COVID did not make a difference in March this year. So it should not make next year. I believe that July 2022, at least 15 crores ITR returns would be filed. That is my belief. I may be wrong, and I don't want to be wrong, but in this case. So then investing in exempted instruments, as I've already dictated multiple times, invest in your spouse or your child's name by PPF, because or even mutual funds. So after a year, they usually become tax free, or maybe 3 years in such cases. So no extra taxes would have to be paid. So then a would-be daughter-in-law, not done in North India, or would-be wife, if they are to be married, you can invest in your would-be spouse name, because when the interest accrues, at that time the relation should be subsisting. That is the rule. So again, it will not be clubbed with yours, but will be taxed on them only. So then, because again, those people whom you are gifting or clubbing your income, they'll be having a lesser tax bracket than you. So you as a taxpayer should be mindful of the gifting and the clubbing provisions. But yes, income are not directly received by the taxpayer, but they are to be reported in the taxpayer's ITR as part of their total income. Because non-disclosure, there is a section of a list of drop-down menu of list of exempted income. You have to mention in there. So non-disclosure could lead to tax, interest, and penal consequences. And you should never ever take a income tax, even a soft inquiry. They don't usually send a soft inquiry. There, everything is a soft one. Ultimately, it hardens up later on. So they actually do not send the soft ones. Take them very seriously, because they are always on firm footing whenever they send the notice. So as per the Indian tax laws, every person is liable to pay taxes on income, even if it exceeds the basic exemption limit. So somebody earning a gross income of 2.5 lakhs, gross total collection, 21,000 per month on an average. 21,000 is 2,52,000. So if you're crossing 250, you still have to file your ITR, although zero tax ITR. It is not done in India. So the problem is that we don't know about certain things of gifting and clubbing, and that is the reason actually the problems happen. So this is the moral of the whole story for today. Can we claim, can we not claim, can we club, can we not club? Usually the ones which is done is the minor one and the spouse one, because that is the closest relationships that we have. So thank you so much for a patient hearing. And I hope I stuck to my time. Yes, 70 minutes exact, 68 minutes. So this is my YouTube channel. You all are aware of it. So you can subscribe to the channel, hit the bell icon. I am posting video every day, and they'll continue to be so at least till 31st July from today. So every day you'll get a video. So they already been scheduled over there. So this is my social media presence, except my page, which is by Dr. Bhavdeep Ahuja. The rest is Dr. Bhavdeep. So this is my email, website, and phone number. Most of you already know it. So I'm writing a finance series as well. From issue 8 to issue 20, which have been published, are all on mutual funds. So you can download and get a knowledge. It is not easy or practical to get a mutual fund session done, because that will involve a lot many things. So it is better to read them and ask for any queries if there are. So do send me your feedback in the WhatsApp group wherever you are. So bookers and brickbats both will be welcome in equal measure. So thank you so much once again. And I stop my share for the question time from all of you and unmute you, all of you. You can mute yourself and ask. Okay. So I think I'm confused. Suppose a father gifts his married daughter an amount of 5 lakh, 10 lakh via online mode. The father has received his sum as the maturity amount of an investment. Will the daughter be taxed for that gifted income? Moreover, if she invests that amount, those gains will be taxed to the father. No. The father can transfer the amount to the daughter, exchange a gift deed, and the daughter can continue to do that. In these cases, we don't look out for the adequate consideration part. You can automatically claim as a part of your gift deed normally. That will not be taxed to your father. That ultimately becomes your income. But yes, if that money keeps lying in your bank, then when that money starts earning the interest, you'll be liable to pay tax on that amount.
On the interest?
On the interest, of course. Interest is your income only. Your income is interest only.
Okay.
Yes, Ajay, any queries from you?
यस सर, एक पूछना था, अगर मैं मेरे किड्स के अकाउंट के अंदर गिफ्ट कर देता हूँ और वो जो है अमाउंट वो टैक्स फ्री टूल्स में डालता हूँ, जैसे ELSS या ऐसा कुछ है, तो उसके अंदर क्लबिंग का प्रोविजन कैसे रहेगा?
देखो, for things like PPF and SSA, I already mentioned, since they are long-term things. But when it comes to things like ELSS, usually people don't stay invested for long time. Number one. Number two,
Yes,
even
sir.
if you are invested in the name of ELSS, usually बच्चों के नाम पे हम लोग SIP करते हैं, SIP in mutual funds. Usually, we rarely do a lump sum.
Yes.
In those
SIP.
case, the KYC is done for us only.
Yes.
Whether we pay from our minor account or whether we pay from our own account, both are allowed
Yes.
as per mutual fund. You can pay from either account. The only thing is that they need a cancelled check photo,
Yes.
and your name as a guardian should be there on the check, and you can go ahead of that part. The problem comes that if after 3, 4, 5 years, 7 years, you find the returns to be very lucrative. तो यार मेरे म्यूचुअल फंड 7 साल पहले लगाए थे, दे हैव एक्चुअली ट्रिपल्ड, 3 गुना हो गए, 4 गुना हो गए, लेट्स टेक इट आउट. क्योंकि हर एक चीज की हम लोग सोचते हैं ना, लाइफ होती है,
Life होता है.
तो वी एक्चुअली टेक इट आउट. अब चाहे वो माइनर के नाम पे है, द टैक्सेशन विल बी इन योर हैंड. बट यस, अगर आप कोई और चीज में रिबेट नहीं ले रहे हैं, बिकॉज अगर आप बच्चे के अकाउंट से कर रहे हैं, या बच्चे का सेविंग बैंक अकाउंट तो होगा ही ना, तो
Yes,
अगर
sir.
1500 आपने वहीं पे एग्जॉस्ट कर लिया, तो टोटल जो है आपकी वट एवर इट इज गेन्स विल बी योर्स ओनली. यू हैव टू पे टैक्स ऑन दोज गेन्स. 1 लाख तक तो एलटीसीजी टैक्स फ्री है ही है, उसके
Yes.
ऊपर है. बट स्टिल पता क्या है, ये एलटीसीजी का हुआ बना हुआ है, स्पेशली शेयर्स एंड स्टॉक्स का.
Yes.
जस्ट इमेजिन, अगर आपके म्यूचुअल फंड ने आपको, अब पहली बात तो ये है कि म्यूचुअल फंड जिन्होंने पुराने लगाए हुए हैं, फॉर एग्जांपल 2015 में somebody invested, the benchmark or the cutoff date is 31st Jan 2018.
Yes,
Those
sir.
dates have been frozen in the system. आप भी चेक कर सकते हैं. मेरे पास जो म्यूचुअल फंड पुराने इन्वेस्टेड है, लंप सम खास करके, आई हैव written down the date for that yesterday only, because the market is on a high. I was actually very skeptical of this kind of a scenario. The economy is worsening and the stock market is booming. So this is something to be afraid of in today's time. I actually read a very good article on this in the afternoon after my session. So the only thing is that if you're having a decent enough return, mutual fund prices are at their all-time best. And certain mutual funds which I thought will not cross. If a few of you remember, in one of the sessions I had mentioned about a few mutual funds. I think session number 9 of basics, if it was, if I'm not wrong. So I told you about various mutual funds like a Sundaram Mutual, like a Aditya Birla. I told you Aditya Birla ka 327 was the price. It had never touched that in the previous 3 years. Even at the LTCG price was 327, it never crossed 340 till that time. And that session was done, I think, in March end or February start, if I'm not wrong, maybe in March end, because in the 3 weeks of March, I didn't take any session. So either Feb end or March end. Can you imagine what is the price of that mutual fund today, Aditya Birla Sun Life Mid Cap Fund? Today's price or yesterday's price, 378 rupees. State Bank Magnum tax gain had never crossed 180, 189. 2 months back, now it is 245. I'm not talking of the share price, I'm talking of the mutual fund price, जो हर रोज पैसों में बढ़ता है, कुछ पैसे. And I am really afraid ये it is a bubble. 2 days back, Reserve Bank, परसों बल्कि, Reserve Bank issued a statement that whatever stock market is heading to, it is a bubble. And if there is a bubble, it will burst. So, कितने mutual funds के example? IDFC का mutual fund, I rated it as one of the worst mutual funds that I had in my portfolio. The 31st January 2018 price was 56 or 55 rupees. I remember because I check them every day. 56, 55 rupees. Till February this year, it never touched even 55, less than the 31st January 2018 price. Can you know, do you want to know what price is it trading at currently? 75 rupees. 75 from 55. Yes, this is the time to book profits. And मैं दोपहर को मेरी रोज वर्कशॉप होती है, मैं रोज जाना चाहता हूँ. ऑनलाइन में रिक्वेस्ट के लिए मेरा वो पासवर्ड क्रैक हुआ है, तो अदरवाइज आई वांट टू गिव देम फिजिकली. एंड आई बिकॉज ब्रोकर के कुछ एएमसी भी चल रहे हैं, कुछ डायरेक्ट भी चल रहे हैं. आई वांट टू गो डेली, बट डेली मेरा सेशन होता है. Just keeping my fingers crossed कि Monday, Tuesday में profit booking कर लूँ, because there is no end to greed. But if something is giving me good returns, my almost mutual funds have grown, and they were one of the worst mutual funds that I had, and bought in 2016. So in less than 5.5 years, they're already at 2.5 times the prices. What else return do I need? कौन सी चीज 5 साल में डबल होती है? So only thing is that. So when it comes to LTCG, for the old funds that you have invested, from where I started the stock, The LTCG cutoff is 2018. For example,
Yes.
something like IDFC fund, for example, it is at 75 rupees. But I will be charged if I have, suppose, 500 units of that. If I book profit for that, maybe I bought it at, if I remember, yes, it was bought at 31 rupees in 2016. So it is already more than 2.5. So if I go for the similar kind of a redemption, मेरे को लगेगा मेरे को तो 42-43 रुपीज पर यूनिट ज्यादा मिल रहा है, तो दैट मींस मेरा तो 20,000 प्रॉफिट है सीधा सीधा. इसी तरह के अगर 5 म्यूचुअल फंड हो गए मेरा तो 1 लाख हो गया. बट नो, आई विल बी गेटिंग अ बेनिफिट ऑफ 31st January इंडेक्सेशन. तो माई डिफरेंस वुड बी 75 minus 56, 19 rupees per unit. 19 into 5, 9,500 will be my profit based on that. जो आज इन्वेस्ट कर रहा है उसको तो ऑब्वियसली फॉर द करंट रेट पड़ेगा ना प्राइस. So this is not the time to buy, this is the time to sell usually, if your goals have completed. So LTCG, as again started the discussion from there. So even if you sell off 5 mutual funds and your total gains, not your total collection, your gains compared to 2018 January benchmark are 1 lakh plus. For example, मेरे सारे प्रॉफिट मिला के 1,10,000 है, शायद टोटल अमाउंट मेरा 5 लाख हो जाए. So 1,10,000, I will pay 1,000 rupees as tax only.
Yes.
Amount above 1 lakh is 10,000. 10% of that, 1,000, that will earn an interest. That will earn the LTCG. Is it more? 1,10,000 में से अगर 1,000 देना भी पड़ जाए, what is the difference? 1,09,000 तो मेरा ही है ना, tax free. People are still afraid of it. LTCG क्या चिंता उसकी? That is not a thing to be afraid of. So for those things, I believe when you sell it off, nobody will keep a mutual fund going for long. Yes, if you have younger kids, probably 3-year, 4-year-old kids, and you are having a specific goal of their education, of their marriage in mind, and the funds you have picked up, you are absolutely sure that they are one of the best in the market, one of the best in the business. Maybe chalo jab nahi rahenge, you can still sell them off. But yes, you can then retain them for longer period also. That is the situation. But when you retain it beyond their minority age of 18, then they automatically can be transferred when they turn 18 in their name, and whatever return they have, that will be taxable in their.
Okay. So उसमें PPF में जाना वो ज्यादा, that would be safer.
अरे, it is always a mixed bunch. You have a daughter child, so you can do SSA also, so Kanya Samriddhi also. डिपेंड्स आपने साल में करना कितना इन्वेस्ट, उसके बाद आप डिवाइड करेंगे अपने में और बच्चों में अकॉर्डिंगली. तो दैट इज द कैलकुलेशन वी अराइव एट देयर बाय. और कुछ नहीं करना है तो मैं यही बोलता हूँ, अगर 2 बच्चे हैं, मेल एंड फीमेल, लेट्स सपोज बॉय एंड अ गर्ल, तो ट्रांसफर एटलीस्ट 4.5 लाख रुपीज, 1.5, 1.5, 1.5, 1.5 सुकन्या एंड 1.5 PPF फॉर ईच. 4.5 ये कर दिया, 2,000 की कम से कम 2 या 3 सिप, that would mean 6 into 12, 72,000 each for the year. 1.5 लाख और हो गया for 2 children roughly. So you can easily invest 6 lakhs in their name. 3 लाख दोनों के नाम पे चल जाए या एक के नाम पे ज्यादा चला जाए, whatever. Does not make 6 lakhs goes out of your hand. And imagine the amount of corpus they're going to have after 15 years. You can't even imagine. अब ये तभी आएगा ना, 6 लाख आप उनको देते हो और कम से कम 4 या 5-6 लाख अपने लिए करते हो. That is the thing you can look at the holistic picture. The problem in India is people don't even invest in 1.5 ATC only. So who will actually gain out of that?
तो उसमें सर 1.5 लाख जो है वो गिफ्ट करके उसके बाद उनके अकाउंट में डालने है कि डायरेक्ट उनके PPF में
डायरेक्ट भी कर सकते हैं आप. That is not an issue.
Yes,
You
sir.
can do it directly also.
Okay, sir.
Yeah.
Okay, sir.
You can transfer it to a minor child's account. वहां से transfer कर दीजिए. Both ways you can do it.
Okay, sir.
Any more queries?
Is there any limit, sir, for the parents to
No limit.
No limits.
No limit. The only thing is you should have the source. If you want to gift 1 crore rupees, you should have 1 crore in your account.
That should be in a digital mode. In a digital mode.
Anything above 2 lakh has to be digital mode. That is a bygone thing. So usually we don't need. I've already taken a portion of this in the previous session number 7 of basics, I guess, when I told you to take the use of your family members. So you actually people don't realize the importance of this thing, that the tax bracket. अब मैंने आपको simple example दिया कि जो आपका amount आपके 30% earn कर रहा है, वो सीधा straight away zero tax पे आ गया, क्योंकि that is already above 10 lakhs. So you're making a huge difference in that amount, in that sense. I hope something is clear to you. I know all the things won't be clear to you in one go. Yes, you will need to rewatch the session, but don't worry, things will get clear. And now I've told you the basics. You can read on the literature available in the net
Yes,
about it. So you at least have a basic understanding. Then you can build on that. The problem is that we just start to read and sometimes we don't understand. So at least I've told you a few basic things, that who are considered relatives in our income tax terminology. What is the advantage of gifting? What is the advantage of clubbing? What is the minor provision? What is the spouse provision? What people do sometimes by showing their wife's income, which is a housewife or a say freelancer or having lesser income. So people do all sorts of such things. So you need to realize that yes, certain things are not as easy as they seem to us. So any more queries, or we call it a day?
no, sir.
Okay. Already almost close to 10. Okay, then you take your leave. For the paid group members, I meet you next on Thursday or Friday only, most likely. One, we have to do the costing session and the indemnity session, and one more if possible in the next week. Or no, minimum 2 are there for next week for sure. So thank you so much, and I take your leave, and have a great weekend. Enjoy the weekend with lockdown or without lockdown. Enjoy it. We are going to have a very short kind of unlock starting from next week onwards. Our timings for curfew have changed. So take care, guys. Bye bye.
Good night, sir.
Good night.
Good night, sir. Thank you, sir.
Good night.
Thank you, sir.